Hello traders, Day Trader Matt here with businesswithtrading.com, doing an Emini Trading Room recap for the 5th of November, Wednesday, and today was, an interesting day to say the least. There was quite a gap up here. Market did come down and then it came back up. So it pretty much closed very closely to where it opened at as far as the first half of the trading session, or the morning that we actually trade till 12 o'clock. Today we had 3 trades. We were 1 for 2, missed the trade, and ended up dropping 5 points on the market. And it's always better when you actually have a cushion. So when you do have a couple losses, you're able to maintain that in your P&L account. You're able to have that cushion, and that's why I always talk about consistently profitable. Being consistently profitable for me is very important, and for the members of the room, my clients, it's a very important topic as well. Because if you're not consistently profitable, then it's hard to really be in the business of trading. To even create a business around that. Which is pretty much what the site is based around. Creating a business around your trading, rather than just trading for your business. If that even makes sense. I go into a lot of detail in that in the coaching courses. But anyway, let's get into what we did on the day and talk about it a little bit. Our first trade, the market did open here, chopped around a little bit. As it started coming down, we did take a long, which, obviously in hindsight was not a great idea, but, it was looking decent to me. The market did come down, it did take that out, and we were looking for a long. Actually, I'm sorry. We're watching this. It came down, and then it came back up, and then it came back down. As it was coming down, we got long up here. We got long right here. Market did come down and stop us out. After it did that, we were looking for a long a little bit lower than this, so we didn't not get filled here. Market came up again, which was actually quite interesting, and then it moved sideways. We again had our entry a little bit lower, did not get filled on that one either, and then the market started to move higher. As it moved higher, we did take a short, and our short was right in here. So we got short and we waited on the market, looking for it to go a little bit lower, and we did stay a little bit after the room, not very much after, because we got out right here. This was where we were looking at. I was wanting to see price move a little bit better in my direction, but it didn't. We got out right here. I was happy enough with it. And you see, obviously price did come up a little bit more, and then it eventually sold off. I talked about it in the room. It was a nice short after trading hours as far as the room was concerned. It definitely did work out, but it's one of those things when you're in a trade, it's important to be able to mitigate your risk and have proper trade management. The trade may not work out as well as you thought that it was going to initially when you entered, and that's why all that is really important. Maybe the trade looks like it's not working out as well, and you're like, oh, I'm just going to get out of it. You have to have a reason why. So if it looks like it has in the past, when it didn't really work out in your favor, that's a pretty good reason. But if you're just afraid because the market might come against you, but it might not, and you're not sure where it's going, that might be a bad reason for even entering the trade in the first place. So there's a lot of factors involved in trading, and that's why it's difficult, and that's why the professionals are very small. The percentage of professional traders is very small because there are a lot of factors, and not everybody's brain works that fast to be a day trader. That's why day trading is difficult. As far as if you look at the whole, day trading in a bull market, if you're just going long every single day, like in the late 1990s, it was really simple. But after that left, and you had to be long and short, not at the same time, but maybe in the same day, it became difficult. And a lot of it had to do with, people's thinking wasn't on the level that it needed to be. And that's what I work with traders a lot on. It's a very, very, very important topic. I could talk for years on that. But everyone's different. Everybody has different mentality, different mindset, different things they did in the past, different things they're going to do in the future. And that's what, makes trading so fun and interesting because of that. Everybody enters with a different mindset, different personality. They're going to manage a trade differently. They're going to look at things a little bit differently. Even with the same system. You've probably heard, the axiom, you give 10 traders the same system and they're all going to trade it differently. One's going to be successful, some are going to be moderately successful, and some are just going to turn it into crap. Because it happens, because everybody has a different mindset. It's really, really important. And the sad thing is I see a lot of people out there, preaching psychology and talking about it, and they don't know what they're talking about. And I'm like, well, what the hell? Why are you teaching this crap? I get a little irritated, I guess, about that. But anyway, I'm going to go ahead and cut the video off now. Hopefully what I talked about made some sense. You can always leave comments below the video. Thanks for watching. Have a great, great rest of your day. And I'll see you back here in the markets. Thank you.